Hey, FYE Finance family, welcome to Flip It with Samara, tutorial edition. So in this episode, we are going to be doing a dive into another financial report, the balance sheet statement. So if you watched part one, you saw that we did a dive into a profit and loss statement, what it was, how to split this statement up into three main areas. And so we're going to do the same with the balance sheet statement, okay? If you are someone who is utilizing the QuickBooks platform, that is the system that we will be using to show you how to navigate to this statement and how to read what is on this balance sheet statement. Okay, for some of you who may or may not know, I am a certified QuickBooks Pro advisor. So not only do we utilize this platform to provide accounting services and tax services to our clients, but we also utilize this platform as a training tool to our clients as well, because we want them to be able to get into the system and navigate to these reports and understand these reports on an as needed basis. Okay. As with the profit and loss statement, I would encourage you to review your balance sheet statement as well on a frequent basis. So either on a monthly basis, but also on a quarterly basis. It's important to review your financial statements so you understand what's going on with your business. Okay, they are very, very useful and important tools. So let's jump right into it, right? So when you open up the QuickBooks platform, you will arrive again at your dashboard screen. Okay, and in order for you to navigate to your reports, you just click on this button here and it will bring up your balance sheet statement. Okay, you'll be able to navigate to your balance sheet statement. So we are looking at, again, Craig's Design and Landscaping Services. Okay, and this is how your balance sheet statement is going to look. Okay, what you will see here is that there are three main areas on the balance sheet statement. You have your assets, okay, and then you have liabilities, okay, and then you have equity. All right. If we were to expand these areas, you would see that assets can be current assets, right? And they can also be long-term assets, okay? Or fixed assets, I should say. And then when you look at the liability section, you will see that you can have long-term liabilities and short-term liabilities, okay? If we were to expand some of these, all right? But for like just review purposes, we're going to keep it short and sweet. I don't want to overwhelm you with too much. So we want to look at this more concise view of the balance sheet statement. And then you also have your equity area. And then the equity represents like the total worth of the business. All right. So when we talk about assets, all right, this is everything that the business owns. Okay. So when we talk about assets, it can be in the form of a bank account. Maybe it's money that the business has in the bank account. If you have fixed assets, maybe it's property that the business owns. And this can be buildings, this can be land, this can be cars, right? So think of that property, right? And then when you talk about liabilities, this is money that the business owes, okay? Not owns, but owes. So when you think about liabilities, you can think about payables, right? If you buy things from another vendor on credit, okay? You can think about loans, right? If you had to get a loan from a bank, right? So think about those two sections in that way. So assets is money that are things that you own, and liabilities are things that you owe. Okay. And so when you when you look at your assets and your liabilities, that is what makes up your equity. Okay. And you can see here that your equity is a negative amount. It's not good because the equity represents the value of the business. Now you may ask, why is the equity negative, Samara? If you look up here, your total assets is 23,000 roughly, right? I'm rounding. And then your liabilities is 31,000. So you owe more money than you have, or you owe more liabilities than you have in assets, okay? Which means your equity is negative, right? So that is how you read a balance sheet statement. It's important for you to understand at all times the value of your business. A lot of people create a business and grow a business in hopes to sell it one day. Maybe you don't want to work your business forever. So it's important to understand this equity value of your business when you're talking about valuation. I won't get into that. But when you talk about terms like valuation, that's what investors are looking for. They're trying to see what the equity is of the business. Okay. So again, it's important to understand the three main sections of a balance sheet statement: your assets, your liabilities, your equity. Okay. So assets minus the liabilities is how you're going to get your equity, or adding them together is how you're going to get your equity. So if you have assets that are more than your liabilities, then you'll have a what? Positive equity. But if your assets are less than your liabilities, then of course it's going to create what we see here, a negative equity. So just make sure that you remember those three areas: assets, liabilities, equity, okay, so that you can understand how your company is being valued, how it's being looked at by not only investors, but also by lenders, right? This is a report that most banks will ask for before they lend you money, because they are using this report to determine your risk as a small business owner. So just like I advised in the profit and loss statement, I will advise the same thing: connect with a professional, get with an accountant, get with someone so that they can make sure that your books are being maintained in a manner in which these financial reports are accurate, especially if you are one who is trying to get other funds from lenders or investors. You want to make sure that you have good, solid financial reports to present to them, so that you are presented as less of a risk, small business owners. Okay. Again, I would advise you to review these reports on a monthly basis, but definitely on a quarterly basis, so that you understand the value of your company at all times, right? So hopefully you found this helpful, right? Part two of our financial reports. Stay tuned for part three, where we're going to discuss a cash flow statement, small business owners. We will see you soon.